Hi guys, thanks for tuning in to another episode of Nuggets News. We're back with our monthly crypto mining update. We welcome back Will. How are you this month, Will?
Very well, Alex. And yourself, mate?
Pretty good. Sleep deprived, like we were talking about in the pre-interview. But hey, that's why that's why we love it. That's why we go through crypto winter, isn't it? For the exciting
Yeah,
times. How about
crypto
you?
doesn't sleep.
How's your sleep routine, mate?
Mate, it's pretty good. We moved into a new place at the moment. So obviously it was a bit of chaotic moving everything. We're actually moving office at the same time as well. So yeah, it's been a bit of a crazy month for us, but nevertheless, it's great to see Bitcoin pushing on higher. And I think alts will get their time pretty soon as well. But yeah, there's some interesting things going on with the Bitcoin network that we'll definitely run into.
Yes, and Ethereum, and I've got my Loki top on today. The Aussie boys have been very busy with some of the stuff that they've changed. So let's dive into these slides. And to start off with, you've just got a bit of an overview that we want to sort of do a monthly checkup on, I guess, health check.
Yeah, absolutely. I mean, it was cool. I mean, one of the biggest episodes that we covered was around the Bitcoin halvening, and there was a lot of uncertainty at the time. We had people talking about the spiral crash that could have come through, and people weren't 100% sure whether the market was going to push up. And I think at the end of that episode, we both kind of agreed that we are heading into that next cycle for the Bitcoin that it does follow after the halvening, and we tend to see kind of this pullback and then this consolidation period and then an escalation. And Bitcoin's definitely done that after the COVID crash in the chart. As you can see, just before the halvening, we were down at about 5,000 US dollar a coin. And we've pushed back up all the way to high of 13,800 just the other day. So about 250% gain in a short period of time. It's definitely not just contributed from the Bitcoin halvening. I've got points on the sides that PayPal's come out and announced that they're obviously going to start taking on these crypto payments. You and I would both agree it's probably not the best way to engage in the crypto market. But also, I think a major factor contributing to this is the US dollar and its devaluation against major currencies. So, yeah, I mean, just a bit of a recap there. It's good to see Bitcoin pushing on, and it's definitely good to see those predictions from the halvening taking place.
Yeah, I was going to say, is there as much like macro analysis and discussion in the general mining community? Like, I know a lot of the miners are also traders and investors, but are the kind of, the guys that are just mainly interested in mining, do they really think about the macro side of things that much or?
Look, they definitely do. I mean, at the end of the day, in a later chart, probably I think it's on slide 8. If you want to quickly flick to it, we are going to look at the network profitability, and just above the candles, you can see that red area is basically anything under that price, where Bitcoin's sitting at maybe 16,000. Miners are really kind of running at a loss, so to speak. And so in previous episodes we'd looked at that we were so far away that looked like a massive gap, and now that gap is really closing down. So relating back to the macro side of things, miners are definitely always looking at what is this market sustainable, is it worthwhile us expanding when sometimes we're running at a loss. And to be honest, the way that I think things are shaping out and the way Bitcoin is starting to increase in value, I do feel like we're going to get to exactly what happened during 2018 when the market started to rip back up again. You're going to get supply of BTC miners going completely off the shelves. The price of them on the retail market is going to be pushing up, and the profitability is going to come up and increase as well. So yeah, definitely always looking at macro factors, and there's things are looking pretty exciting. I'll look in at later slides as well after we look at some of the network hash rate and talk about some of the profitability for the Bitcoin miners as well.
Yeah, and I guess this next slide is about the hash rate, and we've spoken about China and the wet dry season and how some different hash rate will even move, relocate depending on the hydro power and all that. So one thing that we've just seen literally in the past 24 hours is that news about Iran kind of adopting and the central bank saying, hey, we want to hold all the Bitcoin that we're using to
Mm.
pay these imports and exports. So it's almost circumnavigating the US dollar, which is going to have a whole rift of side effects, but that's another story. But for me,
Mm.
it's more about how the global hash rate is becoming another sort of tech war, currency war. We floated this idea for months and months, but it's fascinating for me to see these countries, and maybe Russia have got all this energy. I did an episode during the week about it. Who knows where this is going to play out, where they really start to concentrate that at hash power, just to become a kind of a superpower in the same way we see them stockpiling gold? Are those countries going to try and stockpile Bitcoin before the US?
Absolutely. I mean, I think it comes down to the keyword control. Like, no government, no superpower wants to lose control of something. And Bitcoin is more and more proving itself as a strong storage of value, a global currency or means of transaction. And no superpower is going to sit there and go, oh, yeah, we'll just ignore it or we're going to ban it. They want to control it as much as they can, or they want to have a holding in it as much as they can. So, yeah, I mean, yeah, there's huge institutions now getting involved. It's really, really exciting times. For a long time, even yourself, Alex, no doubt you went out to the bars and people talk about crypto and they think you're crazy. And now, look where we've all come and having a big impact on this environment. So, yeah, I mean, it's clear, as you said, that everyone's kind of got their eyes open now and they're not sleeping on it.
Yeah. And in terms of this hash rate, it has dropped off from about, let's call it 150 to 130-ish.
Yeah, exactly right. So, yeah, just on that, I mean, obviously, recently we were at the highest network hash rate that we've ever seen Bitcoin mining be at before. So that kind of gives us a bit of an idea that a lot of the miners are turned on. A lot of people would, you've seen photos of all these miners just in the bin and not being turned on anymore. But a lot of those miners, I personally believe that even if Bitcoin's price starts to soar, those miners probably won't come back onto the network. And the reason being is their power, the amount of power that they use for, say, producing only 50 terahashes, they're still using 3,000 watts of power. Whereas the new miners are producing 110 terahashes, but they're also only using 3,000 watts of power. So I do feel like that peak that we reached at around the 150 mark, as you said, on the network hash rate, is kind of the capacity of what the market has to give in terms of more miners coming online. The recent pullback down to 130 on the terahash mark is largely because of what's going on in China, as you said. We're leaving the wet season where hydroelectricity is pumping out and we have cheap power. We also have a lot of damage from the dams, from the floods and the Gorge Dam that we covered in previous episodes. And basically, people having to relocate their miners up to the north to prevent from these flood damage, and also electricity costs are going up, so some people are turning off. So that explains this kind of pullback on the network hash rate. If we jump on to the next slide, you can see that the difficulty is still at all-time highs. And we've talked about this in previous episodes. Is it every 12 days, every 14 days? 14.
Well, every 14 days at that current hash rate. So when it drops off like it has at the moment, in theory, if it drops 20%, it could be 14 days plus 20% for it to adjust, yeah.
Correct, exactly right. So that network difficulty is still really high, but the amount of workers, solving those problems has gone down. And that's what's leading to these really high transaction fees and slower blocks. I mean, no doubt you've probably experienced, and your members have as well. You're trying to transfer Bitcoin from a Trezor or an Exodus wallet or wherever it is onto an exchange, and you're sitting there going, shit, did I transfer it to the right address? And it's, just taking 1 or 2 hours. In the next slide after the difficulty one, we can actually see the average confirmation time that it's taking to send Bitcoin on the Bitcoin network. And it was at a high of 267 minutes. So, that's a long time, like far too long for what people are used to, at around, the 20 or so minutes sometimes. So yeah, it's a bit of a worry, I guess, but at the same time, we always got to remember that this market is very, very young. It's only 10, plus or so a little bit years old. And it's not ready to have the whole world transact on it yet. So in these times of big rushes, things are going to be a little bit slower, but it will expand out over time.
Yeah. So at this chart here, I mean, you see the ups and downs, and even an average of 50 minutes might sound like a lot, but you've got to remember that some people are quite happy to send a Bitcoin transaction with a low fee, and they just, as long as it's there overnight, they're happy. So this is an average. There'll be a few in here that are a few hours, but a lot of people still do want to send it to the exchange and get there within the 2 or 6 confirmations that an exchange wants. So that first confirmation time here, might be 10, 20 minutes. So that's why the average is a little bit all over the place. But I absolutely noticed this the other night when it was 22 minutes just to get that first one. And paid with a pretty high fee. So
Yeah.
yeah, I wasn't aware this was going on, but actually saw it firsthand. So that is interesting.
Yeah, and I had the same, the same thing. A lot of our members, I released a trade that I was doing. I was selling some Bitcoin at the close to the 14,000 mark, and a couple of the members jumped on and said, "Oh, yeah, I'm looking to sell. My coins haven't arrived yet." And it's just that exactly that. There's just that congestion. It's taking longer to get there. I think fees were pretty high as well, like around $4.50 US just to withdraw from some exchanges as well. So yeah, I mean, it's something to be aware of. It's good to educate people and have people actually understand why that is, as opposed to being worried. And there's always an answer. And you can check out these charts on blockchain.com as well, if you ever need to figure out what's going on yourself.
And if those people that haven't been through a full market cycle, those of you that were here in 2017 even might not have realized what was happening at the time when it got really expensive and it was $50 to send a Bitcoin transaction. You got a taste of that the other day. So, have you got a plan? Do you know how to send coins? For me personally, there's wallets now where you can set up through, say, Loopring and have a second layer solution where you can send your Ethereum over that. So even if Ethereum is super clogged, Bitcoin's clogged, maybe you've got a plan where you've got some Litecoin and you can only send maybe a smaller amount and then use a leveraged trade to hedge your whole account. So think about how you're going to do it and what your plan is if things get super expensive.
Yeah, it's a throwback Litecoin there. Like I remember during 2017, when I was much more of a rookie than I am now, and I used to think that like every transaction you had to do, you had to transfer it to Litecoin and then send it off because that was the cheapest way. And to a degree, it kind of was. It was the cheapest way of going about it. But yeah, I mean, it's good to have those plans in place and understand, exactly how you can go about things and save yourself some fees.
Yeah, and that is when Litecoin went berserk from a few
Yeah.
dollars to $300 because there was billions of dollars of Bitcoin value that was temporarily going into Litecoin just so it could move around. And that's where I think it might happen again. You say to yourself, well, what are the most trusted OG chains? And the other day, Dogecoin spiked. And
Yeah.
I was actually talking to someone about this, and that's probably something we didn't think about what was happening. And this is where people go. The OGs, the whales, go to Litecoin or Dogecoin. A lot of them don't necessarily like Bitcoin Cash because it's a fork. And then you look elsewhere. Do they really like EOS or Tron and other things? No. So that's why they use these old coins.
Yeah, 100%. I saw that Dogecoin spike as well. And like, funnily enough, I was just looking at it from a trading perspective. It seems to follow this pattern of just like pumping up, coming back down. I actually bought some just before. I got very lucky. I didn't expect it to spike like that, but more just from a technical side. I didn't even know that that's why it had pumped up, to be completely honest. But good to have the reasoning now.
Cool. Okay. So next up here, we've got the miner fees. We've already touched on this, but that's up to $2.5 million. And I think the stat is that Ethereum's like regularly double or triple it now in terms of, Bitcoin versus ETH miners, what they're getting.
Yeah, definitely. I mean, I was on a meeting last night with the teller, Nick, or the Mandalore, a lot of people know him as, and their dev group. And a massive issue for them right now is these gas fees, is making it incredibly hard for a project like Teller, which is an ERC20 token, to actually form blocks on the network. Because as soon as the gas fees goes up, they're an Oracle coin. There's a lot of price actioning. There's a lot of verification that goes on just to form the one block. That requires a huge amount of gas, and a lot of the the mining pools simply can't operate. It's just costing them way too much, and there's this huge fluctuation going on with instability with mining and mining pools on the Teller project right now. So I mean, there's always the one issue just with gas fees actually spreads through the whole ecosystem. And I think on that point, it's really important that we do move towards this 2.0. And start to really get these sharding happening and lower fees going on as well. I'm not sure if you're have any idea yourself of when if you're confident that 2.0 is around the corner or not. I think I've read a couple of things saying that it should be, but I'm hearing both sides of the story. I don't know if you have anything to comment on it.
Yeah, so phase one is still going to start in the next couple of weeks, but the actually getting it there and sharding and that is a long way away. But what I am confident about is that we're going to have scaling solutions on Ethereum as it currently stands. Like I keep mentioning, the Loop Ring, Rails is another one that's built on top of Loop Ring. we're going to see maybe synthetics or Aave. One of the biggest protocols is going to come out with a scaling solution, and people are going to go, oh, wow. And that's going to really be a game changer. So we've already got like Amisa Go are doing Tether, but just no one's using Tether on Amisa Go yet. Or we've got the Raid network of integrated with a few wallets, but just, we haven't kind of got that network effects. You kind of need two or three of the big players to do it, and then people go, oh, okay, I didn't know I can do that. Send it for 1 cent now. And that's when I think it's just going to be within a few weeks. Things go crazy on crypto Twitter, and everyone goes, oh, you can send for 1 cent instead of paying $20 in gas fees. And just this week we saw Andre launch his new project. So the guy behind Wi-Fi, he proposed this project, and it's gone. I don't know if you saw this. It went from like $3 to $300 in a day. So it did 100x in a day.
Not
But
surprised.
one of the things that project does is aim to kind of batch transactions. So people say, I want to do this, and it kind of puts it together with a heap of people that want to send similar transactions, and then
Okay.
it sends them all at once in a big batch. So the more people that end up using this network, the better and more efficient it becomes. And I think people love speculating on anything he does, but he keeps seeming to come up with these brilliant ideas, and you
Yeah.
just think like, why hasn't anyone thought of that, or
Oh,
is he
100%.
able to do this stuff? But there's problems. People are solving all these problems every day.
No, exactly. And it happens so fast, doesn't it? Like something that can be the Achilles heel or the nemesis of the network, the next day is solved. And it's like, oh, people forgot about that, didn't they? Or so, yeah, no, it's definitely an interesting space.
And in terms of, this next slide is about the Bitcoin mining profitability. I do wonder if the Ethereum mining fees at double or triple, they're probably going to go down with all this scaling. But that whole argument about, can Bitcoin stay secure if the halving keeps going down in terms of that reward and the fees, is that going to be enough to sustain it long term? And then I look at $2 billion of Bitcoin has already moved over to Ethereum when it has all these brilliant scaling solutions that are coming along. And then we have one day where things get really congested on Bitcoin and the fees spike. And you kind of think to yourself, well, to be blunt, Bitcoin hasn't really done much. Lightning Network is not really that much better than it was 3 years ago. So that is something that I'm very interested to see if that negatively affects the market and how people react if Bitcoin fees go to $50, $100 and people aren't able to use Lightning as easily as they can use a lot of these other things these days.
No, 100%. It's a really good point that, like one of the big things that people love about Bitcoin is it's not so rapid changing. Like things don't happen overnight. Like it really has to go through governance and take time. And, it kind of, it'd be, you wouldn't say stable, although it hasn't been too volatile as compared to previous years. But it is one of those things that I quite like about it, that you kind of know what to expect, and it's not like you wake up the next day and it's forked completely or something's changed. So there's advantages of that. But yeah, I would like to see Lightning Network definitely kind of scale out a little bit more, and not have to see problems like we're seeing at the moment when things are taking off and it's taking a long time to make transactions, and there's a lot of network congestion.
Yeah. Any comment on the profitability side of things here as well?
Yeah, definitely. I think it's a good one, and people can go back to previous episodes, probably around the halving time. The return that miners were getting in was around about $4 or so, and that's ramped up to $9 now, which is really nice in terms of a revenue side of things. You still need quite low power costs for it to be quite profitable. Obviously, if you're running on renewable energy right now, I would say Bitcoin mining is a great investment. We have had a lot of people reach out to us that have solar farms or big, commercial buildings out in the industrial areas, and they are looking to scale out in terms of Bitcoin miners. But I do think that as I mentioned at the start of the episode, we are going to be surprised. I do think that we are going to see Bitcoin kind of push on to new highs again on this scale, or the Bitcoin halving cycle that we're seeing roll out. And I think we're going to see a massive shortage in supply of miners for Bitcoin miners in particular. So yeah, there's some the details here. Obviously, this is based on the highest hashing Bitcoin miner that's available in the market at the moment, the S19 Pro. It's 110 terahashes. On the left-hand side, you've obviously got it at zero power cost. So someone with renewable energy would be earning about $9 US a day, which is 3,300 US a year. And the miner itself is pretty close to that price. Obviously, for the retail market, you're probably paying around that. if you're on the wholesale or distribution market, you might be able to pick them up at $2,000 or so. So looks like they're breaking even more than a year. Obviously, this is a good time for Bitcoin mining, I would say, compared to other times with the price having such a big rally and the network hash rate pulling down quite a bit. So it's important to take those variables into consideration. But yeah, I do say that I think we will see a shortage of Bitcoin miners again. And in the next slide, you can see how quickly, just at the bottom of, at the chart there around March, right when the halving happened, there's such a big gap from where Bitcoin miners start to kind of break even, I suppose. And already, like right now, we're starting to get very close to that and starting to head back into that profitability section. And it doesn't really take much for that profitability to really blow out. And then everyone kind of ear pricks up and go, I want to get Bitcoin miners. I want 100 of them. And the supply kind of shorts out. So yeah, it would be interesting to see. If Bitcoin keeps rallying past 14,000, I think that'll happen pretty quickly.
Yeah, so it's still sitting around 16,000 like we were talking about. And hey, with the recent moves and everything that's going on news-wise, I definitely think that it's just a matter of time until we get that next leg higher. But let's talk about Loki. So for those that don't know, Loki is a little Aussie project. I'm not sure if you call it a fork or kind of a variant of Monero privacy, but also kind of like a layer one protocol. So not just a currency, but they've had some changes recently, Will.
Yeah, they have, and yeah, love it. Love Loki, really great project. I love Simon and I love Key as well. I think they're doing a great job. I really do think that the privacy space is something that you want to keep your eyes on in the next 1 to 2 years, particularly. With central banks looking to start bringing out digital currencies, which are going to be even more centralized than what they've got now and have more control. And what's happening in China right now with releasing currencies that actually have a timeline or a expiry date on that currency, so you have to spend all these kind of things are really impeding on privacy. And I think that Loki is doing a really great job from starting out as a fork off Monero, as you said, Alex, and coming out to be a private messaging service. They've then gone out and released LokiNet, which is nearly functional. And it kind of acts as a VPN provider, so you can protect your network privacy. And now they're moving into similar to like a Uniswap platform where you can swap tokens but keep the transactions private. And with that, we've just recently seen them move away from their hybrid mining model. So they used to have proof of work miners running as well as proof of stake service nodes running. The mining side has now been cut off, so they're no longer the miners are no longer facilitating on the blockchain, and we are now moving into fully proof of stake. So I've left some details here on what that means and where the new distribution of block rewards are going to be going. And basically, what's going to happen is with the release of Chainflip, which was just recently rebranded. It was called something else, but it's now called Chainflip. And think of that as like a private Uniswap. With the release of that, they're going to need Loki coins to be locked up and available in liquidity pools. So the old reward that was going to miners, the six Loki per block, is now going towards what we call a liquidity fund. And that will ensure that when in 6 months' time, when Chainflip does launch, or it might be earlier, that there is already some Loki sitting there and available for liquidity for the swaps. So yeah, really, really awesome project. I just love, like, if you go onto their website now compared to when it first started, and it was amazing when it first started, but their GUI wallet, their website, everything's looking really nice. I really like this project. I was saying to yourself, Alex, I personally picked up quite a large amount of Loki at the lower prices that it is at now, and I've locked that into service nodes. So yeah, great project and really cool thing that's going on there, and obviously heavily related to the mining side, moving away from the mining and going proof of stake.
Yeah, I thought the devs might have been anonymous, mate, but you've just told us all their names, so that's all good. No, I have had the guys on the show as well. I'm just going to bring up the Loki chart quickly for people at home to have a look at. Kind of a classic pattern of one that maybe people that didn't know it at all just thought, this coin's sort of dead. That one doesn't go back too far. I'm sure it was on some other exchanges.
Simon and Key are definitely on the front page of the project.
Yeah, okay. No, either way, I'm sure this one was down a lot more and it's recovered really nicely, which is always great for an Aussie project to see. But no, I was just stirring you, mate, because some of these privacy coins have anonymous devs, and you've just dropped their names. But Ethereum gas fees, we have touched on this already. Is there anything you want to add there?
I mean, yeah, it's obviously again one of those things that it's a bit of a broken record, but I think we just need to fix some of these scalability issues. But one interesting thing on slide 10 that we're on now is just the sheer amount of volume of transactions that are actually contributed from the Uniswap platform. Like 97% of the DEX transactions, as you can see in that bottom kind of image, are coming from Uniswap version 2. So I thought that was pretty interesting. It's a beast of its own making. I don't know. Are you following the Uniswap token? I don't know. Obviously, you would. I remember talking to you last month, and you collected quite a bunch of your MetaMask wallets. But do you have anything to comment on the Uniswap token at all?
I still think that there's a lot of value to be had that people haven't really understood yet around the idea of a governance token that gives you a ownership right to a percentage of the network. And I started to kind of tell people that that's why I liked Sushi, but then the lead developer kind of mucked that up for everyone. And then we've had others like Curve and then Swerve, and then they mucked it up a little bit. So I'm kind of waiting for a project to execute it really well, where there's an idea or a team and the VCs have got too much power or the tokenomics aren't quite right. We get a project that comes along and forks it or copies it, and they distribute it genuinely to the community. And that's when I think people are going to click about, hold on, if I do own a percent of this, I'm going to get all the fees. This is super fair. And that's going to challenge the way we think about how these projects are launched and funded and all that.
Yeah, definitely. I mean, like personally, when the token first came out, and yeah, I'd seen like was it $2,000 a wallet or something, and I was like, oh, I'm selling that, and it started to go up in value, and I started to look into exactly that and understand it a little bit more. I do think it's going to be a good one to hold in the long term if you can pick it up at a lower price. But yeah, I mean, who knows? I would love to see Loki's chain flip platform come out and attract even more attention there, and take some of the volume away from Uniswap and share it into more private sector. But yeah, it's quite a big beast, bigger than possibly Binance at the moment. So
Yeah, I think projects like Loki, and I'd love to chat to them about this. It's can they almost integrate their technology directly into their wallet, but also integrate it kind of to Uniswap, because you're just never going to be able to replicate those network effects. And that's something that I've been saying for ages, and people go, oh yeah, you just like Ethereum. But then you see a chart like that and how Uniswap just in the past quarter has gone from very, very little to $1 billion. That is very hard to compete and for other chains. But hey,
yeah, definitely.
The more competition. On
Loki as well, they released their wrapped Loki token as well, so you can engage with Uniswap by changing your token to the wrapped version.
Yes.
And you can then trade with it there now as well.
Is that easy to do? Have you done that on their website?
Yeah, I did it. It was really simple. It's like a couple clicks, turns into the wrap token, can store in the MetaMask wallet after that, and then transact a bit. It's a really cool addition to my strategy with their service nodes, because the other update that came out with the recent fork was the lockup amount to run a full Loki service node is capped at 15,000 now. So when it first released, I think it was at about 45,000 Loki, and it was on an emission curve going down constantly. I think after about a year, it was at about 25,000, and now they've made it fixed, right? So if you want to get a Loki service node, you buy 15,000 Loki, you lock it up, and you start earning probably about a certain amount of Loki per day comes into your wallet. Now, what you can actually do with that Loki, if you want to compound your returns, you can change it for the wrapped Loki, and then you can participate in yield farming on Uniswap platform. So yeah, it's a really good addition to the strategy. You don't actually now have to wait until you accumulate another, say 1,000 Loki to stake on someone else's node, or 3,050 Loki to set up another one of your own nodes. You can compound those returns straight away by contributing it to the liquidity pools. So I think that's really, really cool.
Yeah, and a lot of projects are doing that. And like we said before, wrapped Bitcoin has taken off in popularity. You've got the ETH miners here and the profitability per day. we have touched on all this already. These are still going to remain profitable, I guess, until we get that transition away. We've touched on the timeline for that. But anything else to add, Will?
There were so many people, and some of our community members did go ahead and buy the ETH miners, and like naturally, I had to advise against it. It's just too high risk with Ethereum, pretty much looking to make these miners obsolete. It could be just around the corner, but nevertheless, they have powered on, and they're still going and earning quite a high amount. This is at a time that gas fees are low. That I've taken this image, so it's not too out of disparity, but that $10 a day is nothing to be sneezed at, and it has been higher when gas fees are high as well. So who knows if the Ethereum 2.0 is delayed or any longer, then it could really pick up. But yeah, that's definitely one of the more profitable ASIC miners on the board. The other ASIC miner in the next slide, Alex, and an interesting one to touch on because of the event that's coming up, and we can definitely touch base on it on next month's episode, which, by the way, is a year coming up, isn't it? I think it's our 1 year episode
possibly
next month.
If not that we've already had it, but yeah, no, that's $25 a day. That is nice, and that's kind of where Ethereum maxed out at as well, when the miners were getting so much from the fees rather than just the block reward. So Zcash as well, quite profitable. It's these ones, but yeah, you got to take a bit of a gamble. But lucky for those.
Yeah,
people.
I mean, before these miners came out, we were aware that the block halving was coming up, and it looked like they were not going to be the best miners for that reason. But even if you halve the rewards that they're sitting at now and getting around $12.50 US a day, they're still doing very well. I dare say I do think manufacturers will pump out another round of these, and we'll see them not getting the 420,000 souls, but pushing probably to like a 600,000 soul miner, and it may make this Z15 less profitable. But I'm definitely looking into these. I'm considering, if I can get some cheaper of the Z15s, or even the next round of the Z miners. Definitely looking to pick some of these up. I think they're looking quite good.
And Ethereum Classic here, mate. We've sort of touched on a couple of times in previous episodes how these other coins have been 51% attacked. We've seen Bitcoin Cash, Ethereum Classic plenty of times, and now they're having to implement these changes, what's known as checkpoints. It's basically saying, well, every 10 blocks, we're kind of going to put a marker and say that history can't be changed, so that someone can't do a 51% attack that's more than 10 blocks. That means that exchanges can say, well, we're going to change the confirmations required to 10 blocks because we know that that's kind of a checkpoint. So this is like a very centralized thing, isn't it? But more and more of these coins that are just having less and less hash rate compared to Bitcoin and the number one coin for that algorithm, they're really struggling to die off. And call them ghost chains or whatever, but do you have any thoughts about how long sort of Bitcoin Cash or SV can survive?
Yeah, I mean, as soon as you start implementing any kind of form of centralization to something that should be decentralized, it really takes away from its value. And 51% attack, it can be a very expensive hack to happen. Just here on like a recent attack in August cost OKX around $5.6 million. And yeah, so like I feel like these projects are really going to struggle. I think the best option for them is changing the algorithm that they're mining so that they can actually get a more decentralized amount of network hash rate being contributed. And that makes it, like for Bitcoin example, if you try 51% attack Bitcoin, it's just not going to be possible. There's way too many miners in too many different areas now to accumulate enough hash rate to actually 51% attack Bitcoin. So they need to. I don't like the checkpoint solution. I think it's better to open or change your algorithm, fork your algorithm, and to something that's easier to attract more hash power on the network is the solution that I would personally prefer to see. But yeah, I don't think it's not looking good for Ethereum Classic at the moment. Let's put it that way.
And I've got my theories around Grayscale and why they're doing it to keep it alive, but we'll see if that plays out in future. But we've been going for a fair while. We'll wrap it up. It's been another good educational episode. I hope you guys have enjoyed that. Any final thoughts for people at home?
No, I think, just like I think after the people that are following these episodes, it's good to go to that blockchain.com website, keep yourself in tune with what's happening with network hash rate and try and understand this market from the miners' perspective, it's definitely helped my trading quite a lot, and actually understanding the fundamental, how profitable is it for Bitcoin miners, and where are they going to break even, can tell you a lot about where the price is going to go as well. So always going to keep recapping it in these episodes if you prefer to wait on the monthly basis, but you can check it out there. And it'd be interesting to see where Bitcoin's price is at the start of next month, end of next month.
Let's hope it's like December 2017, and I always learn something in these episodes as well. So thanks for tuning in, guys. Thanks for joining us, Will, and we'll see you again next month. Cheers.
No worries. Take care, Alex.